Welcome to the Corlin Economics Report, a weekly look at financial and political topics relating to asset-based investing. Guests on this program pay no fees to appear, and guests and hosts disclose any equity interest in companies profiled. Now, the Corlin Economics Report.
Hey everyone, welcome to the weekend edition of the KE Report. Corey and Chad here, your hosts for this weekend show. Also your hosts throughout the week on our website, kereport.com. And podcast, use your podcast player. Just search the KE Report. And also on Substack and YouTube, also the KE Report. That's where you can find all of our daily editorials and company updates from throughout the week. On this weekend show, we're going to at least start off focusing on the metals sector. We'll touch on silver, but we talk so much about silver during the week that it's not going to be a huge focus on this weekend show. But there are other things to talk about in a couple other metals areas that I think deserve some attention that might be getting overlooked. And on the back half of the show, more looking broadly at these markets and how they're looking to end the year. Kicking off this show with Brian Leni. Brian is the founder and editor of the Junior Stock Review. And Brian, let's start with silver. As I said, we don't want to spend too much time on silver, but silver has just been on an absolute tear. It's exploded higher ever since it broke that $50 level, consolidated very quickly above there, and then just kept taking off even to start this month. A lot of people are saying you just got to plow into silver stocks. It makes every silver stock profitable, and there just aren't that many pure play silver stocks. What do you think about silver's run here, Brian?
First, thanks for having me on, guys. For me, maybe I'm the Debbie Downer of the metals bullish talk. I'm a bottom-up investor, and so I invest exclusively in the equities for profit. And while the metal price is certainly important, I don't try to get too wrapped up into where I think the metal price is headed. That said, I wouldn't say that I'm bearish on silver. I certainly think that it has all of the components for something that's going to go up in the future. But I think, looking across the market, looking at how many people are sort of participating in the bullish pump or the bullish sentiment surrounding the silver price and where it might be headed. To me, I think investors need to be aware of kind of the environment you're in and how that might be affecting where the silver price is going. Second to that, metal price is just one way that you can be wrong about a junior mining company. There's so many ways that you can lose money outside of being right or wrong about the metal price. And so I would say there's some caution with just, taking a bullish silver thesis and applying it to a junior mining company. I think you want to look at the fundamentals of that company, look for the reasons outside of the metal price of why that share price is going to go up, and sort of invest or speculate accordingly. And to me, over time, that's going to be the best way for you to make money and keep the money that you've made. The biggest mistakes I've made probably in my speculation career are based around, buying things because I thought I knew where a metal price was headed. And I certainly learned from that the hard way. But again, I like the bullish sentiment. I think silver price is going to go up over time. I think if you've seen how fast the silver market has risen and you're looking to deploy money into the equities, trying to buy something cheap, taking some profits from the silver companies and trying to buy something that's cheap that might be on that next wave of metal price appreciation, to me is how I am playing it. And I think that people should consider playing it.
Well, Brian, some very cogent thoughts there. And before we move over into where some of the rotation could go, just another question on silver. When we look back a year or two at how some of these companies were being valued, it was $1 an ounce in the ground, maybe $2 an ounce in the ground. Now we're actually seeing some companies with ounces in the ground, blasting higher. One company we've talked about with you in the past, and I know that you've shared it on our show before, so I'm not giving away the secret sauce here, is AbraSilver. If you look at where it was valued last year compared to this year, or just the trajectory this year, clearly the ounces in the ground have been valued a lot higher. Now, they've had a lot of catalysts on the exploration side and on the key, on milestones and different economic studies. But overall, when we look at Vizsla, when we look at other companies, they're getting closer to $4 to $5 an ounce in the ground now. So we are seeing quality get rewarded, but to your point, just because something has silver in its name doesn't mean that the management team or the jurisdiction or the dilution or the capital markets are quality. But with quality companies, they are finally getting rated higher What do you make of that as far as, are we closer to the end of where these things should be valued, or is there still room for these things to get valued at $10 an ounce in the ground or $15 an ounce in the ground?
Well, I think especially in a high sentiment environment, like a bull market environment, there's definitely room to go higher. I think without a doubt. I think with a company like AbraSilver, this year has sort of been a catch up. And I think it's probably solely based around Argentina, the jurisdiction. The quality of Oculto is basically always been present in terms of size, grade, basically across the board. To me, it's always been like at or near the top of the world class silver projects owned by a junior. And the thing holding it back was always what the future is going to hold for Argentina. And I think, what we've seen in the second half of 2025 is the solidification of RIGI and how Abra is going to participate in that. And with Malay only getting stronger in was it September or October vote, whatever month that was in, I think that and the application basically being solidified, I think, told the market, hey, look, we've got 2 more years where this thing should head to construction. They should basically be concrete in receiving all the benefits for RIGI, even if Malay doesn't win a second term. And not only this, but then you have the rise of East Oculto, where you've seen these gold grades that have been phenomenal. And while the critical mass is already there in what we knew with the Jack zone and the Oculto main zone, but this, and I forget the drill results right off my head, but those, what we've seen over the last couple of months has been phenomenal. And this is huge gravy on the cake. And we haven't even touched the porphyry systems here. And for me, anyways, like with the strength of what Oculto is, what we see there, the porphyries in this area, to me, it's not a matter if they're there. It's just what grade and probably what depth they're going to find them at, and that plays more into what that gravy is going to look like. And I think that puts them at the top of the M&A pyramid when it comes to actual silver companies out there. And I think the market is starting to recognize that. And so, you have a positive sentiment in terms of the silver price, and I think that's going to continue moving forward. And when you have like a looking forward, a solidified future over the next 2 to 3 years, I think that puts Abra in a huge position to capitalize on a very bullish market.
Brian, you're not alone in thinking that Abra is definitely on the table for some sort of M&A. It's impossible to predict the timing on that, but we've had other commentators also mention that. Just a question, though, outside of Abra and Vizsla Silver, which both seem to be arguably world-class deposits, both are moving forward in the right direction. The silver space is much smaller than the gold space, and I think there's a lot of other companies that have silver resources but aren't nearly of the quality that Abra and Vizsla are. What do you see out there? Are there other arguably world-class deposits or assets that are being worked up, or is the silver space so small that we really just have a couple of them?
I think if you want to consider it from a pure, and I'm not even sure it exists, like a really pure silver play, maybe Vizsla is as close as it gets, or some of the deposits in Mexico, but most of them have, whether it's a gold component, the probably the biggest one would be the Z and lead connection. And again, it's not that I've ever even sort of tried or sought out that sort of company. I just look for stories that are undervalued and almost regardless or agnostic to whatever the company is sort of looking for. I'll say, for instance, like I invested in a company called Group 11. This is back in the beginning of April. It was very fortuitous timing. And I looked at the drill results that they had, and it was a great, zinc and lead hits that they had. And they sort of have a sprinkling of silver in there, but it was a very, minuscule component of it. And I made the investment in the portfolio because of the quality of the management, because of the quality of the lead and zinc that I'd seen. But really what I thought was interesting is they started hitting on these silver and copper hits below. And basically, the feeder system to this lead and zinc that we're seeing in the main mineralization that they've discovered was actually really interesting to me, and it was high grade. And I think that a company like Group 11 that's I think the critical mass is obviously going to be built on what they've already discovered, but stuff like the copper and the silver hit that they've hit, and the the percentage it's going to represent in the potential economics of a future mine, I think companies like that are going to start to garner more attention. They're not necessarily the pure play, but they're super high quality from my standpoint. And I think that's maybe where investors can look at stuff that isn't being recognized yet in this sort of silver euphoria. Group 11, definitely doesn't market themselves as a silver company. Yet, if you look at their drill results, sort of where their discovery might be headed, I think there's going to be a significant silver component to it. And it won't be undershone if the silver price continues to go up.
Well, I think that's an interesting example to use. We've had Bart on the show before. Obviously, operating in Ireland, a lot of people may not be as familiar with that, but there is a mining history there. But in particular, Glencore is nearby. Glencore is a key stakeholder. And we've made the point on the show with other companies, Brian, love to get you to weigh in on this, about polymetallic deposits like this. Some of the biggest mines on the planet are polymetallic. Some of the mines that get acquired, famously the Arizona Mining's Taylor deposit by South 32, very big price tag for that. And as zinc, lead, copper, silver, all mixed together, those are some of the big mines, and that's what the big boys like. So, I think you make a really interesting point about playing some of these metals through polymetallic deposits. Just like to get your thoughts on playing polymetallic deposits in general as a strategy.
Yeah, and again, I can't say that I was maybe necessarily smart enough to play it as a strategy. I was just looking at the quality of the company, and I'm fond of Bart. I have great respect for him and how he operates, and so that was sort of the basis. I think whenever you're looking at a polymetallic deposit, VMS or otherwise, I think metallurgy, mineral processing has to be at the top of your list. You have to talk about recoveries. You have to talk about the order of those recoveries, whether the recoveries that you're talking about represent an actual flow sheet, or whether these are just individual recoveries from the mineral. There's a lot of nuance when it comes to the polymetallic. And I think, you bring up a good point that there could be a strategy to this because the senior mining companies like these deposits if they work, because you have broad-based metal exposure. And, when it sort of levels the playing field where you don't see too highs and you don't see too lows. And that sort of level playing field when they can predict cost, they can predict profits, I think is what a lot of companies love to see rather than this like whipsaw of metal prices, depending on, what they're invested in and the quality of that deposit. So if I was an investor and I hadn't invested in one of these, I think the first thing you want to look at and talked about with management is about metallurgy. From there, you go into the basic economics. Once you know how much metal is actually recovered and which one is going to represent the economic significance, then you can sort of start working through the valuation for that company. A company like Group 11, still very early in the discovery. As to my knowledge, I don't think that there's any network that's historically or otherwise done on Ballywire. And so, this is still something that needs to be answered. But in the meantime, the grades and stuff that we're seeing in relation to other Irish deposits of the same ilk, things look really good. And I think they're going to stay focused on trying to make this thing bigger. And the news release that we had this week represents a huge step in that. They found another mineralized body. It looks like it might extend along the same trend, meaning that there's potential to double up on that mineralization and maybe even triple up. If you go with the news release from earlier this year, there was suggestion to think that there was even a third body projected. And so things start to get really big really quick. And I think that's why you saw the reaction by the market. Bart did a really good job articulating exactly what gets broken down from this latest news release and the potential for the future. And again, like to me, that's where I'm focused first. But that metallurgy is going to have to be something that's answered. And in this case, there's two different types of mineralization. You've got the massive sulfide mineralization, and then you've got sort of that feeder zone. And that's the stuff that's silver copper specific. And I'm not really sure on the risks or the difficulties in sort of processing that stuff. But that's a question that still needs to be answered.
Yeah, fair enough. It's still fairly early stage for Group 11, but hey, they're hitting with the drill bit and the market is rewarding them. That also ties into this whole copper discussion that, in all fairness, you've been chatting with us about this pretty much all year in terms of the opportunities in the copper space. And we've been agreeing with you in the fact that copper has been really stabilizing above $5. Now, there was that drop after the whole tariff, I guess, whatever that was. We can just call it the tariff issues. But when copper was climbing above $5 and then it dropped and then it climbed back above $5 and now it's up over almost 540 right now as we're recording this. The stocks have also done very well. The majors, at least. The juniors seem to have been lagging. This has been fitting the whole narrative, though, of what you've been sharing with us is some of these copper stocks are really the opportunity to be in. With copper now at one of the higher levels, at least it seems like sustainably for the year, has anything changed in your copper analysis when it comes to the equities?
No, I'm just as sort of bullish on the copper market as I have been the last couple of years. I think with this year in particular, I think things have changed with the advent of the Grasberg accident and what that sort of means moving ahead. And I think that's particularly why the copper price has risen. And I think this time it's actually going to stay. We've seen pops in the copper price over the last couple of years, and I will say myself that I thought, okay, it's sort of in line with where I thought things were going to head, and just never held. And looking at earlier this year, I was looking to move profits from precious metals into something else, not necessarily contrarian, but something that was cheap, and I thought copper fit the bill. And out of the 4 or 5 picks I've made this year in the portfolio in the newsletter, 3 of those have been copper based, and the returns have been fantastic. And that was even sort of before the copper price has eclipsed and now stayed above $5 for a prolonged period of time now. So I personally think that copper is showing, despite what might be a weak economy, that the future for the copper price, the future for copper supply is sort of in question. And they're going to have to see higher copper prices to incentivize these developers, for these producers to bring more production online. And I think 2026 is going to be the year that copper really steps out and shines just as much as probably the precious metals are, and maybe even to a different degree. Again, in terms of size of the market, in terms of the juniors that are out there, there's definitely less quality copper companies than there is precious metal companies. So again, it's that much fewer to choose from. And so those quality deposits, those quality companies are the ones are going to go first. And really have already started moving this year.
Well, Brian, you raise a great point there as far as the copper potentially shining big next year. We were just at some conferences where people from the stage were making the same point. You could make the point that last month, in the month of November, copper closed at an all-time monthly high, the highest level it ever has closed a month at, and so did the COPX, which is full of the copper producers. And when you look at a lot of individual copper producers, they're up near 52-week highs, so they've been doing great. To the point on the developers, a lot of them are up 100%, 200% this year. So people are picking up on the quality, and it's normal in a metal cycle for people to plow into the precious metals first and then start pulling profits and rotating. So as far as the rotation trade, you could see more of that next year. I guess as far as the drivers for a good development project, the problem is they take so long to build, they take so much money to build. How do you parse out what you think can actually have torque in a sector that has a 1 to 2 decade timeline?
Well, that's a good question. I think if you look at the companies that let's take Surge. We've talked about Surge before. We've talked about Hot Chili before. I think both Hot Chili even more so. Hot Chili sort of stands out to me because of how close they are to that construction decision. And they're still probably 2 years away from that. That gives you perspective on, like you're saying, on the timelines for these copper projects, especially when you're on the upper end, those 100,000 ton type of projects. But that's also what sort of separates the wheat from the chaff. And that's maybe how investors, if you're looking for what company to invest in, what might have the most torque, I would say those ones that are, you're looking for something that's obviously selling for less than it's worth, but then its proximity to production or the potential of production or construction is on the upper end, or like, let's say within the next 2 to 3 years. And it really narrows down the list of companies you can look at. A company like Surge, they're going to have a PFS completed in Q1 or just after Q1. And I think if things kind of work out the way that they could for Surge, you could still see something in 2 to 3 years, maybe 4, depending on permitting. That would probably be the biggest thing that I would, in terms of timeline, be concerned about in BC. But those sorts of things can narrow it down for you. But again, I would start with something probably a little more simple, and I would start with price. Where can you find a good company that's got good management, that's running the company the right way, that's growing a resource, or that is doing the work in economic studies to sort of get it to that construction decision? And I think ultimately those sorts of companies you're gonna see price appreciation. And while torque might be more associated with the timeline to construction, or maybe you have to take more risk and get into the exploration side of things, which I wouldn't necessarily think, or I would suggest that's for everybody. But certainly there would be lots of torque, but it comes with the higher risk. But there's going to be a lot of money that floods into copper. And so if you pick halfway decent on the companies that you invest in, I think you're going to do exceptionally well. And of course, the valuations, I think, for a lot of these copper companies are looking great now. And while the obsession is on silver, it's probably still sort of around gold. You can probably get better deals in the copper space, and there's other metals too that show great valuations right now that might be next. And in what I think is going to be a market that sort of sees all these metal prices probably do well, despite the fact that the economy might not be great.
Brian, you made a comment there that will stick to the quality copper deposits. The problem that I think some investors have is that a lot of these copper deposits seem to look the same. Yes, there are some that are, again, kind of world class that seem to be getting moved forward by companies that have unlimited amounts of money. But there's a lot of these copper deposits, small, large, medium size, all that come out with very similar economics. So, what do you consider quality copper deposits? What do you look at?
Okay. So for me, there's simplicity. Again, like I'll use Surge as an example. It's a single pit, simple metallurgy, simple flow sheet. It's got the infrastructure around it. There's the Huckleberry Mine, Imperial's Huckleberry Mine, which is closer to Otsa, but you've got all that infrastructure, and I think that might be the other separating factor. Just thinking about it more in terms of what the market would give more torque or give more credence to is something that's got the infrastructure in and around it, something that doesn't require major roads to be built, these sorts of things that again that's tied to timeline. But the stuff where that's existing just stand out. Firefly Metals we made that pick in September. It's done exceptionally well. That's a past producing mine and in Ming that is ultra close. The only thing I would say that will delay a Firefly from going back into production is that they just want to keep pounding dollars into exploration and making Ming bigger and bigger and bigger. Otherwise, like those guys, in terms of Canada, they might be the closest thing to production story. All the infrastructure is already there, except for they are going to build a new mill. But that's a story I think that's going to stand out amongst the other ones because of that proximity and infrastructure being that huge one in terms of what the market looks at. Are these guys going to be able to go into production? And you could say 100% they will. Again, it's just when, and they seem to be in control of that. So other than that, again, like the management team, these guys matter. When you start analyzing these guys, the more experience you have, who they're connected to, their ability to raise money. It's sort of synonymous across the sector of what makes a quality company. So I don't think I can shed too much light that people don't already or should already know about these junior mining companies. Proximity to construction, infrastructure. Of course, the more simplistic the deposit can be, I think the better. And then obviously size. That's another thing. If you're going to attract an M&A, if you're going to be an M&A target, you're probably going to have to be on that, definitely on the 500 million ton side, unless you're super high grade for these major mining companies to even look at you. And that's why I think when you look at a story like A-Mark, with the Aurora discovery, I think it's pretty clear that Freeport's not going to be the one that consolidates that area. To me, it's probably going to be a gold company, just because of how that deposit breaks down in terms of grade and that the focus on gold. Freeport wants huge copper resources before they're going to sink any money into it, especially considering a place like the Toodoggone that's going to require some infrastructure. And so again, that size would be right up there with that proximity to a construction decision in terms of, unless the management team is going to build it themselves, which is few and far between of management teams that are qualified or able to do that. So the M&A angle is probably going to have to be something that you look at, and you'll definitely need size there.
Well, Brian, just a follow up on that, it brings up a great point that most juniors do not have the skill sets or the team or the experience to build copper mines. They're way bigger than even building a gold mine or a silver mine. So they take a special skill set. And there's a lot of companies like, you mentioned Surge that has a strategic in there with ARM. And there's a lot of copper companies that have Rio Tinto in there, BHP in there, so, and now even to your point, a lot of gold companies are now becoming strategics because they want to become a copper gold company. How important is it that a project gets vetted and has the buy-in from a strategic, because the odds are they're not going to build it on their own? How important is it to have that joint venture or that maybe even multiple partners in there that have vetted the company first? As an investor, that gives you the confidence that one of the big boys has already given it the thumbs up.
Yeah, like it's one of those things that can be huge. I think I would just caution investors to do some research and to see why that strategic has, or like how they acquired or when they acquired that strategic position. Excuse me. Some of those things are inherited. Some of those positions are meaningless. I think if you saw a BHP invest in a copper developer tomorrow, I would say that that's a pretty good sign that they're very interested and that deposit is legit. And again, you go down that list of those senior producers. If they took, like, if we're talking the next month or so, or like any time this year, that would be a huge positive and I think legitimizing move to watch for. And so that can be something for, especially for investors that may have some trepidation into getting into the copper market if they're not familiar with it. That can be a way to sort of break it down. But if we're talking about relationships with these developers that goes back, let's say more than a couple years, a few years, and you don't fully understand that relationship, I would just have some caution to understanding whether that's still a priority for the senior company. Like I said, with the amount of mergers and acquisitions, with the amount of management changes, things change in the priority list and stuff can get lost. And so a strategic position isn't always a legitimizing factor. You just need to find out why and when. And usually that'll point you towards, what's kind of really going on and what the future might hold. The other side to that is, just because a developer doesn't have a strategic doesn't mean that it's not legit. I just think it probably makes it harder for a lot of newbie investors, especially, to sort of weed through maybe what makes a quality deposit or quality project. And that might be where the trepidation is. But, if you're going to use that as a point to validate companies, just make sure you understand exactly how that relationship or strategic position was taken, because the junior is always going to sell it like it's a legitimizing factor. So just be cautious.
Such a good comment there, Brian. It's always questions you need to ask: when they came in, how they've kept their position up to speed. All of these things need to be considered with these sort of positions. And yeah, obviously, anytime a company comes in now, it's a good sign. But yeah, just be sure you do your research on that kind of stuff. All right, Brian, we're out of time here, but always fascinating chatting with you. Thank you, as always, for your time. For everyone listening on the weekend show, be sure to check out Brian's website. It's the Junior Stock Review. I'll post a link in the show notes to that. And Brian will chat with you in the new year. So thanks for joining us on this weekend show. Have a great rest of your year. Happy New Year. And everyone, stick around. We are going to be right back.
Thanks for having me, Corey.
Al Corlin's firm, A.B. Corlin and Associates Incorporated, provides consulting services to public companies on matters of regulatory compliance. To find out more, follow the link from www.kereport.com. The Corlin Economics Report will be back after this brief timeout.
From power generation to steelmaking, coal still drives the global economy. And the Coal Trader podcast from Clear Commodity Network is where the industry comes to talk about it. Join me, Matt Warder, and my partner Joe Aldina as we break down the latest trends in thermal and met coal, explore shifting market dynamics, and sit down with industry veterans and executives for unfiltered, insightful conversations. Listen to Coal Trader Podcast on Apple Podcasts, Spotify, or at clearcommodity.net. Clear Commodity Network, digital news on the physical markets.
Hi, this is Chris Berry, host of the Power Current podcast. Throughout my investing life, I've been obsessed with a single question. What happens when commodities, geopolitics, and technology collide? About 15 years ago, I founded an advisory firm to help answer this question for both companies and investors alike, and the Power Current podcast is an extension of this effort. Each episode, we dive deep into the current state of the most important markets, companies, and technologies that will power the revolution in energy today and into the future. Find the Power Current podcast wherever you get your podcasts.
All right, welcome back. Continuing to listen to the weekend edition of the KE Report. And in the back half of the show, because we get so many questions and comments that a lot of our listeners want a more technical look at these markets, we're happy to have back on Dana Lyons, fund manager and editor of the Lion Share Pro website. Dana is our go-to, one of our go-tos for more of the technical side of the markets. And we always ask him about resources too. And he shares what his internal models, mostly focused on the broad averages, are showing him. So Dana, I want to start off with silver. We talked a lot about silver this week, but we talked with a lot more people that were analyzing it from more of a fundamental sense. From a technical sense, silver went through about a 14% correction, lasted a little under a month, came back up to test that level, then went through a very shallow short correction after that, and really since has just exploded higher into the high $50 range. A lot of people pointing to $60, then a lot of other people, a lot of the silver bugs pointing to triple digits for silver. So curious your thoughts on this silver move. Would you consider this a parabolic move, and where do you see silver going from here?
Yeah, thanks, Corey. I think we talked about the last couple times I was on that you really saw that parabolic move in the precious metals complex from about April into probably the middle of October. Just an extreme blow off type of a move. Certainly there was some pent up demand for many years that contributed to that. But our thesis, the data that we're looking at, has suggested that while there is likely more left in this longer term bull market in precious metals, on a short term basis, it got pretty exhaustive, that blow off type of a move, and sentiment got extremely overheated. And once that little bubbly move did pop in mid-October, that was a sign that, okay, the air's come out of there. We need to digest that huge move that we saw over the previous 6 months or so, and we just need to digest and consolidate for a time. And so we've expected a trading range in the complex, gold, silver, copper, the miners, probably for several months, and that's basically how the market has run its course since then. For the most part, you look at gold, you look at the miners, that's basically been trading range up and down. It's held up fairly close to the former highs, which is a very good sign going forward for the potential for another up leg. So that has not been bearish whatsoever, especially that huge run up that we have, that it's been able to hold on to most of those gains. But we do expect further sideways action here for at least the near term. Now, silver, as you mentioned, has been kind of the outlier. That one did, after, maybe 6 weeks of a little consolidation, did end up breaking out. I'm not sure if that's going to be sustainable, to be honest, in the near term, just because it is an outliers kind of exception versus the rest of the precious metals space. So we came into that move partly hedged in silver, partly hedged in the miners, and kind of selling at the top of the range, buying the bottom of the range. Now that silver has broken out definitively, we certainly have no interest in staying hedged in that move, even though we are kind of skeptical that it might fail in the near term and come back into that range. Like I mentioned, the rest of the complex for a little bit longer, kind of let sentiment settle in a little bit and restore, so that when we do get that legit breakout, that it is more sustainable, that it can progress, on a magnitude like we've seen some of the other moves over the past year or so.
Well, Dana, I'd asked you this off mic, but just for the benefit of those listening, just want to re-ask it. You had mentioned that it was a breakout, but there was a consolidation after the October highs. The monthly closes on all of these: gold, GDX, silver, SIL, copper, and COPEX, all closed at all-time monthly highs. And there's a lot of institutions, there's a lot of algo trading that looks at those longer duration charts. Does it change the thesis at all that everything technically broke out on a monthly basis to end November?
I think the monthly high closes are certainly not a bad development. It's very constructive and goes along. I think it's marries a thesis that we do think there's more to come longer term in this bull market, but it certainly doesn't preclude the potential for further digestion here in the near term. So I think they both kind of fit into the thesis that we have in that near term, we're a little bit cautious. We don't want to be super aggressive there in the space, but certainly longer term, we're still bullish. We do still have high hopes for the space. And once this near term consolidation shakeout runs its course, we do see certainly more potential to the upside in this space.
So, Dana, curious to get your answer on this. A lot of people in the silver space like to talk about short squeezes. Has this been a short squeeze in silver?
I think there was something certainly to that notion early on. I'm not sure, given the parabolic move that we saw, I don't think you can ascribe much more of this move to just simply short squeezing anymore. I think it's probably that's what you get at the initial stages of a move that can start kind of propel that into that type of a parabolic move, but eventually that runs its course. But that's what I'm talking about, the kind of sentiment reset that we'd like to see here. It would actually probably be more healthy to see this temporary breakout in silver fail and shake some people out, shake out some of the hot money, the fast money, maybe get some short interest back into the market, seen as though, okay, maybe they're looking at double tops, maybe they're looking at a false breakout, and we do build up maybe some bearish interest in it again, which, once we do break out again, that can sustain and serve as fuel and sustain, like I mentioned, a more sustainable breakout and push things much higher on a sustainable basis rather than kind of just a flash in the pan type move here.
Dana, just one more technical one on silver because we get a lot of questions coming in on this, and I've seen a lot of people posting about this that are technicians online. There was that long-term cup and handle pattern really going back to the 1980 high at near 50, then the 2011 high at 50 that made the cup, and then the handle over the last, let's say, 13, 14 years. And silver definitively did close above it on a daily, weekly, monthly basis. So you've achieved a higher level than 50. So a lot of people flipping that cup over and projecting it up to 96 or $100. So that's one way of looking at it. The other thing on the short term, if we dial into the daily, there was on the futures market 54 and a 54 hit in October, and then that correction, and then this move that blasted up to about 59 on the futures surpassed that, which was the double top theory. So that kind of got invalidated. Any idea on a projection of where this could go, or any nuances there around the longer term cup and handle breakout versus the short term break above that recent double top?
I don't love to make projections, to be honest. I like to ride it. We have our extension levels that will take profits. Certainly, if we get there, I would say the longer the space, the longer the base, the higher the space, as they say. So on a long-term basis, if we do get that long-term cup and handle breakout, certainly could be very powerful. You could see a monster move. And then on a shorter term basis, I do see what you're talking about with the double top breakout. I'm seeing the same thing. We saw kind of the same thing we saw in gold, probably about almost, I think at the beginning of 2024, we saw a similar type of longer term cup and handle breakout. And we've basically doubled since then, I believe, and then some. So I would not shock me to see that type of a move eventually, but I don't think it's going to be straight up. And I do think there's some froth maybe to be worked off here, but both those developments, I can't argue against, the positive nature of both of those developments.
All right, Dana, thanks for taking those precious metals questions. Let's move to copper, because copper, really, you can go back to 2022, mid 2022, and copper has been in a nice uptrend. And if you take out the tariff spike and all that noise, quite frankly, copper now I consider it pretty much at an all-time high and grinding nicely higher to that level. Again, you take out all that tariff spike and tariff fall, but even on the back of the tariff clarification and that fall, you were saying that you saw that as a buying opportunity. Boy, has it ever been. Copper's been going up really ever since that. What's your outlook for copper here?
Yeah, again, similar to the rest of the space, we do see the new highs in copper, which is also I wouldn't want to be hedged in that space. There might also need to be a little back and forth here, although I think copper probably got more of a shakeout when like you mentioned in the tariff talk back in July, August, which we did see as a buying opportunity in copper, and even more so in the copper miners, which turned out to be just a gift. Miners, investors being able to buy them at those prices. So that was a gift. I do think that probably took some of the froth out of the market that we do see in the silver market, the gold market still, which needs to probably be worked off more so than copper. So I would say copper probably has less headwind, technically speaking, right here than maybe gold and silver. But I would expect to see kind of trading along the same lines across the precious metal space for the most part. Maybe copper can continue to inch higher, maybe higher highs, while the rest of the space kind of moves sideways and consolidates. But I would expect, for the most part, a lot of the same sideways kind of digestive action here, just in the short term.
Well, Dana, you know where I'm probably going next. I want to ask you about COPEX. Now, it's probably a similar thesis to silver, the silver stocks, copper, but it does appear to be continuing to make all-time highs. It just hit a peak in, like a month or two ago in October, and it surpassed that recently. So is this a breakout in COPEX? Can it act different than copper itself?
I see. Look, if you zoom out, I'm looking back to like 2010, 2011. I'm seeing highs basically in the mid 60s back then, 63-ish level. We're trading right now in the 64 range. So I don't see a definitive breakout from that standpoint. I wouldn't be surprised to see again some backing and filling, some consolidation in this general vicinity before we get a more decisive and again the potential for a more sustainable breakout. So it hasn't done anything wrong. It's just dealing with, I think, some of those former highs from about 15 years ago, which markets do have memory. And I do think probably a little bit more consolidation here before, like I've been mentioning, before maybe a more sustainable breakout. At least it would be more healthy, I think, once we do get that breakout. If we can digest for a little bit and shake some people out, it would be a more healthy and sustainable breakout in that case. But I do think we are still dealing with some of that technical resistance from, a decade and a half ago right here.
All right, Dan, let's move to the cryptos. I want to talk Bitcoin with you because as Bitcoin does and as cryptos are, it's been volatile. It went through a pretty massive drop just in November, down almost 18%, coming off a high of about 126,000 the whole way down to 80,000, but since has rebounded into the low 90,000s. It's been volatile. It's showing that it's, maybe not the safe haven that some people would like to say, but really you look at a longer term chart, even just going back to 2022, still in an uptrend in that $80,000 low. That was a higher low than earlier in the year in April when Bitcoin got down to 74,000. So Bitcoin, what's your outlook?
Yeah, it's still hitting higher highs, higher lows in the long term, like you mentioned. From our perspective, it's not really showing the relative strength, leadership that we like to observe in positions that we own. So I think there's probably a lot better places to be in right now, even though maybe it hasn't, the uptrend, the bull market maybe hasn't been totally invalidated. But on the way up, it's going to have no shortage of technical resistance to get through before it's on a better technical footing. So right now, I mean, We were hoping to see that basically around that low 100,000-ish area hold on the way down. That held very briefly and then broke. So right now, I think in the near term, it's kind of broken. It has to, again, prove to us that it's on a more sustainable technical footing before we want to be more aggressive in that. Or Ethereum, the same story there.
Well, I was going to ask you if there was any nuances between Ethereum and Bitcoin, because kind of two different markets. There's two big ETFs now. Well, there's a lot of ETFs in Bitcoin, but even Ethereum has some dedicated funds now. Do you think there's any nuance between the two?
Certainly the charts are a little bit different. They do trade in tandem. I think the longer term construction is a little bit different. So we trade them separately, even though they tend to trade directionally in the same way. But I guess I would say, if you're looking at Bitcoin, I'd like to see it even above 110,000 before I'm really interested in being aggressive. And then Ethereum, it's got to get back decisively above 3,500 before I'm really that interested in being too aggressive there as well.
All right, Dana, time to move to the broad averages. I want to talk either S&P, NASDAQ, whatever you want to touch on there. They are rebounding, getting closer to or back to those all-time highs. Last time we talked, your models had turned negative for the markets. That was back in, I think, mid-November, even early November, that those models turned negative. Where do the models stand now after this rebound we've watched?
Our main risk model turned negative early November, and we had been seeing, kind of hints at it, like an internal deterioration breakdown a little bit before, basically in a month leading up to that. So you saw a lot of the broad averages really peaked out early October and then started trending lower, which fed into some of that internal deterioration, fed into our model, which turned lower in early November, even as those major averages were still hitting highs. So we were able to protect ourselves during that correction that we saw. Now we have seen, like you mentioned, a nice rebound beginning a couple weeks ago. I think we're seeing a couple interesting things in play here. For us, you had asked me, a couple weeks ago, do we think it's maybe if there's a threat of a major top in the works, or if it's maybe more of a short-term correction reset type of situation. And we did indicate that we thought it was the latter. We didn't think there was signs of a major top, just a shorter term shakeout and what I would say kind of a sentiment reset. And I think all signs since then, all market action since then would continue to lend itself to it being just a short-term kind of a correction. And like I mentioned, a kind of a sentiment reset. So you saw, especially in the large cap growth names, the NASDAQ, the tech space, which had been, those relative strength leaders for a while, really got ahead of themselves. Some of the sentiment numbers got a little bit too extended in those areas, and that's where that short-term risk was. So we saw kind of a tail off in the broad averages, give us a heads up that those new highs in the main averages were probably not sustainable. We saw those get hit, and we've seen kind of a flip-flop action now in recent weeks, which has been super interesting. We've seen the broad market, we've seen the breadth, a lot of the internal readings kind of rebound even faster than the major large cap averages. So now we're seeing more strength in the broad average and in the broad market, and we're seeing kind of still near term risk, I think, in the large cap tech space. So I think even in our model, we've seen a lot of positive behavior in our model. We're not back to a buy signal yet. It could happen this week or early next week. We're not there yet, but we have seen some positive developments there, which we are monitoring very closely. I don't think we're out of the woods yet, especially in terms of some of the tech names, tech sectors and subsectors, which probably have potential for another shakeout here, especially early December tends to often be the site of some shakeouts, some short-term shakeouts and some spikes in the VIX. But again, I would suspect based on some of those signs we're seeing inside of our model as well as outside of our model, I would expect that to be short-term in nature and eventually resolve itself to the upside.
All right, Dana, always great hearing from you. Thank you again, as always, for sharing what you're seeing, what your models are telling you, and diving into the metals sector with us. You know how much our audience appreciates those comments. Everyone, we're wrapping it up here, so thank you for tuning in to this weekend show. Be sure to visit our website, podcast, YouTube channel, and Substack account. Just search The KE Report. That's where you can listen to all our daily editorials and company updates recorded throughout the week. And again, if you want to follow along a bit more with how Dana's trading these markets, check out the Lions Share Pro website, which will be linked in the show notes. Dana, everyone, thank you so much for your time this weekend. I hope you all have a great rest of your weekend.
The Corlin Economics Report is produced for A.B. Corlin and Associates. Opinions expressed on this program are intended solely for the entertainment of our listeners, do not constitute investment advice, and are not necessarily those of this network, radio station, or our sponsors. Find out more about this program and today's guests by visiting www.kereport.com. For Al Corlin, this is Colleen Robbins. Join us again next week for the Corlin Economics Report.